Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
Hey, Dan. What's up, buddy?
Marvin, welcome back.
So I do have to apologize to everybody. My voice is gone, but I feel good.
Yeah.
We had an amazing waste management open week.
Yeah.
But definitely feel better, but my voice is shot. So let's have some fun with that. How about that?
Yeah.
How are you? How you doing?
I'm good, man. I was busy while you were gone.
Yeah.
We had a guest on last time.
Yeah.
We talked about being a landlord, what it's like to be a landlord, why you should, what you should be looking for in tenants, what you should be looking for in property management companies. I think we just scratched the surface on property management, so there was like a ton still left to cover there.
Gotcha.
So we're going to need some more property management guests, I think, because once
I'm
we got into it, I
about
was
the
like,
guests coming up too in the next couple of weeks too. So
man, I
will
thought
be
we
awesome.
were going to cover it all, and we'd like 30 minutes went by in a heartbeat.
It's so fun to talk. But
Bam.
I think today episode is a little emotional, and I'll say that because some people have a funny way about rentals and Airbnbs, and you're starting to see folks with signs in their yard, homes should be homes and not hotels.
Mm-hmm.
But I think there's a big rumor going out there, right? Like one of the biggest rumors is who owns these rental properties?
Yeah.
I think people think corporations own 90% of rentals.
Right.
But as people are going to learn today,
Yeah.
that is not the case, right?
Yeah, I mean
Right.
that's been going on, since really the SFR industry had started
Yeah.
from a corporate standpoint,
Yeah.
right? So these big private equity companies like Blackstone, right, Starwood, they got into the space, Cerberus, big private equity companies. They got into the space. They started buying single family homes to rent, and then everybody just assumed that they bought them all.
Yeah.
Like I don't know what happened where like they just all of a sudden were the face of single family rentals. But the reality is, right, is like, we last year I think we used to it's been a couple years since we had like a really strong statistic here. But if you were to take all the top 50 institutional buyers, all 50 of them, right, they represent 3.67% of the entire single family rental pool in the country.
That's it.
Wow. That's it.
Wow.
So, they get a lot of grief for 3.67%, right? I mean, that number creeped from 2% and probably took 5 years to get to 3. So I don't know, like, are they really the problem, right? I mean, I listened to this podcast with a friend of mine in Las Vegas, and he's got a totally different position on this, right? His feeling is that corporate housing should be outlawed, right? And that corporate housing should be that housing should be just left to homeowners and not owned by corporations. And, I think in his market, there's less than 1% of the rental pool is owned by these, these people. But again, like when they buy, right? And they buy and they end up like buying up all the inventory, and that becomes like where people lose their mind, and they're like, what the heck? These guys are buying up all their houses. Yeah. I mean, people are buying rentals every day. I mean,
So, you said 3.67%. That means 96% of all the rentals out there is actually owned by mom and pop investors, right? So it's not the corporate that you think it is out there.
No.
Where do you think that came from, though? Where do you think that started?
I don't know. I think that, it's like the sheer size, right?
Yeah.
When people are looking at the sheer size of these companies, and they're going, my gosh, if they continue buying, they're going to swallow everything. And then you end up with these like it's like that game telephone, right? You know, I tell you
Yep.
something and then you tell someone else something and then it kind of rolls into a thing. Um, that's why like forever, every time this has come up, right? We've seen it come up during the election, right? I see it come up like constantly
Yeah.
in like bills and things that are being offered out there. But it never really goes anywhere
Yeah.
once they dive into
Yeah.
it because they start looking at it and they're like, well, I mean, is the juice worth the squeeze?
Yeah.
We're really not talking about a big segment of the rental stock
Yeah.
in the US, right? I mean, you would have to figure out a way to eliminate all these mom and pop investors too. I mean, I don't know. I just don't see that being a realistic thing, you know? I don't know.
Yeah, no, I think this goes back to every episode we talk about. Have data behind your decisions.
Yeah.
You gotta study these things. You
Yeah.
think you know,
Right.
but you don't know, right? And you know what else was fascinating? Even with the apartments, you know, Greystar is one of the largest ones out there, but I was blown away that they don't even own most of the market share.
Not even.
Right?
Yeah.
Not even close, right?
Yeah.
I think it was more like 90% are owned by even smaller landlords that own apartment complexes.
Right.
And so
syndication, stuff like that. The guys go in and they buy a building, they bring in 20 of their friends or investors to invest in it with them. That's the most common way we've seen these things acquired, right? I mean, Greystar, of all like the apartment units, right? I think they represent less than 0.5% of all of them. They're the largest by far, right? Like a giant. It's very similar to like Progress, right? On the SFR side, Progress Residential is the biggest SFR operator now.
Unbelievable.
But they own 0.5% of all the rental stock, right? That's not very much, you know. And they've been buying like crazy, right? And it's not changing anything. And so, you know, I don't know how we, other than give you the statistics, kind of share with people you know, that this is not that big of a deal, right? I mean, really what we're talking about is like, do you want home ownership, like people to own their homes or people to rent their homes? And I think that's a question that, you know, and maybe that's something that, you know, people could solve. But I don't know how you can just look at the big institution and say, you guys can't buy houses anymore. You guys can't buy apartments anymore because you're sucking up all the stock, or you know, I've even heard that they were price fixing, you know, and I'm going, how in the world could you price fix with less than a 3% market share? You know, like that doesn't make any sense, you know? So I don't know. That one's tough.
So you don't see a monopoly in sight.
I don't see it, man. I don't see it. You know, I think it's funny that, like, you know, you see other industries, right, where you have these giant conglomerates that own big market share, right? Like, think in tech. You think about Apple, Microsoft, Google, right? They dominate the space. There are millions of other tech companies.
Right.
But do we ever talk about them? No, we just kind of focus on those. But
it,
those guys, they're representing somewhere upwards of like 80% of that market share, right? So that's a bigger problem. Well, maybe maybe that should be the thing we talk about. You know, retail, same thing. Walmart, Amazon, Target. You know, those guys have significant control of that market.
Yeah.
It's not the small retailer that's the problem, right? It's these bigger guys, and they're the ones setting prices and doing that. You know, but like airlines too. There's 4 airlines that own 80% of all air travel in the US. They're private, you know, publicly traded companies, right? These are real things. And so I don't know. To me, it just seems like it's a, you know, it's a discussion point at like lunch and people talk about it, but it's such a small number. It doesn't really seem that it's going to be that big of a problem.
Yeah. So no monopoly in sight, still widely decentralized for the rental, you know, mom and pop.
Yeah.
Well, you know, people get into this because I heard that this has made the most millionaires in the industry.
Yeah.
This is why people do it.
Yeah.
Right. And I just love this episode because I am telling you folks out there, 96% are owned by mom and pop. Right. 96%.
And why is that? Right.
Yeah.
Like, why do they own them? You know, because that's how they make money when you sleep. You know, I mean, I've always said that, like, if you're working like a job and it requires you to use your hands or whatever, that your brain, whatever, for 8 hours a day. And then you sleep and, whatever, like you're really only effective that 8 hours in the day earning income. How do you earn income when you sleep? Like, how do you create, mailbox money or passive income? That's when you can start to build like that generational wealth, or that, that wealth that starts to come in, and you really start to compound, by not just looking at like, what am I getting paid today? What am I getting paid tomorrow? Right? Like, how do I create wealth from that? And go beyond. And a lot of people have leaned on single family rentals or, rental properties alone just to do that. And, not a bad way to go, because, you can earn a lot, and, and do that where you might have some work to do. It's not a ton, right? It's not a ton.
Right. And it's not easy. It's expensive. I don't care who you are, right? Like, buying real estate is not easy. By the way, it's not in one centralized location.
Yeah.
And so if you're looking from an investment standpoint or a rental, your homes could be all over the place. So, why do you think it's so fragmented from that perspective?
I think that if you look at like where the larger institutions are buying or have bought their properties, they're kind of focused in like what we would always say is the smile states, right? Like, the kind of that Sun Belt market. And the reason is, one is the housing stock is newer. Two, the housing stock is easier to maintain because they have less weather and issues with weather. And they like to avoid, any kind of like giant insurance claims from like floods and stuff like that. So if you look at the markets that they've been penetrating, Phoenix, Vegas, Jacksonville, Tampa, Dallas, Fort Worth, San Antonio, Atlanta. Those are big markets for SFR, and they're concentrated. So you see a lot more of that activity in those markets, but it's just concentrated to those, and so it's not a problem in Des Moines. It's not a problem in Louisville, right? It's just not, it's not really a problem there. So I think geographically, it's created kind of some thoughts around that. But also like you have like regulations that have come into effect.
That makes it tricky too as well.
Yeah. I mean, there are municipalities that don't allow corporate rentals, right? And stuff like that. So HOAs that have been dominating this stuff. So I think there's regulation too that causes some of this change. But there's so many ways to own too. And that's the other piece of the puzzle is like, people look at it and they're like, oh, okay, well, like if it's got a face like Progress or Invitation or, one of these giants, then that's the face of corporate housing. But like, what about family offices that have, 1,000 doors or 2,000 doors?
Exactly.
And, there's a lot of those, and, they aren't the same. I mean, they operate exactly the same. They're not the same. I don't know. It seems a little weird.
Maybe we just emotionally attached to real estate. It was just different.
Yeah.
Because we live
new,
there.
Right? Like,
it's new, right?
Yeah.
So
17 years ago, there was nobody owned 5,000 doors.
Right.
That just never was a thing. Now, there's quite a few of them that do, and so I don't know. It's a new industry. At one point, they were saying that was the fastest growing asset class in the country. Well, it's new. I mean, it started from nothing, right? So to get to 3.5% or 3.6 or whatever the number is, like, I don't know. That's taken 17 years. Yeah, it's not like it's not like it happened overnight,
So I think if I'm an investor, what does this mean to me, right? Like ultimately, there's plenty of fish out there.
Yeah.
There's plenty to play with, right? Yeah. So you're an investor. What does it mean to you when you hear corporates is buying everything? Do you feel like, nope, there's plenty out there for me as well?
No, I've always thought that like, they're going to buy what they're going to buy, right? And they're going to look at the inventory differently than I'm going to be able to look at it. One, for example, is like they buy in like concentrated neighborhoods. They buy asset classes that, require less maintenance and less like renovation to get into. Whereas me, like as a little mom and pop investor, I could come in and renovate a property and spend $60,000-$70,000 renovating the asset.
Right.
And maybe it takes me a little bit longer to get it up to rent ready condition. But that also allowed me to buy the property at a better discount. So I was able to buy that property at a better discount. Most of these larger operators, they don't like to spend a ton of money on renovation because it means time. Right. And time is money in their world. And so, one of the metrics that they really do measure is like, how long does it take me to get to rent? Right. Like income coming in on the asset, revenue ready assets is a big deal. So I think, the institution competition is just widely overblown. But there are so many opportunities for the mom and pops to deal on the fringes of like what they won't buy. And not to mention, like, I've seen a lot of people get very wealthy buying properties or, putting small packages of rental inventory together to sell to some of the bigger operators.
Right.
You buy it at we'll get into cap rates, but let's say you buy it at a 6 cap and sell it at a 5. That's a decent spread, right? Or operate it at a 6 and sell it at 5.5. It's like there's money to be made with these institutions out there without swallowing everything up.
So if you're an investor, no need to fear the big corporations. There's plenty of room for all of us small players as well. What about from a real estate agent perspective, right? Like these off-market deals. What it means for them from an agent perspective?
Yeah, and I think, agents, like there just is and always has been and probably always will be two markets out there, right? You got a retail market and you've got this off-market market. And, the off-market market is often like harder for them to grasp or touch. And, but for no reason really, other than the fact that it just doesn't have a website. It doesn't have like, it doesn't have an MLS or concentrated MLS where everything's being focused. So I don't know. When I think about agents, I think that, they need to keep their eye on off-market opportunities, right? Pre-MLS opportunities.
That's right.
Those are buzzwords that real estate investors like shed a lot of value to, right? They love the idea of exclusivity or seeing an opportunity before it goes to a retail market. Because if you and I are like competing on a property and you're going to live in it and I'm going to rent it out as an investment property, we are looking at two totally different things, right?
Exactly.
I'm looking at math and you are deciding whether this makes sense for your family. It's emotional for you. I don't want to compete with you because I can't control emotions, right? I can't control how emotionally attached you are to the asset.
Well said.
And I think that is the biggest, aha that agents just have to kind of remember is like, investors don't really want to buy properties on the market, right? They want to buy them prior to going to the market so that they don't compete with that retail buyer. And, some of the off-market stuff can be a little crunchier too, right? There's a lot of weird stuff that, happens in the off-market world. It doesn't make the transaction more difficult. It's the same transaction.
Right.
It's just that it's not on the MLS, and it doesn't mean the end of the world. I think that agents sometimes will get into.
No, I love that. So off-market deals and investor clients are still the golden opportunity for real estate agents. There's one more, right? There's one more player when it comes to this, and that's the folks that actually are renting the homes. Right? What does it mean to them?
Man, it was funny. Like when you were out, we talked to Donovan about, he's the property manager we were chatting with. And he was talking about like the world of landlord and how things have changed, right? I mean, he used to run Renters Warehouse. And I don't know if you remember that they used to advertise on television that it was like they would be your landlord, essentially, property management company for $49 a month. So they had thousands of customers, that would flock to them for $49 a month. And they, what he said was they treated tenants like they were a dime a dozen, right? That there was just tenant after tenant coming in and they had no issue bumping rents. And like, they never really looked to tenants as that they had any value other than the fact that they were a commodity and you could just swap them in and out.
Right.
But he said he had this like aha moment, and when he kind of left the corporate side and started looking at a new opportunity and really started to focus on the quality of the tenant and keeping the tenant in place. So I don't know. I think that I've heard from tenants that there's pros and cons to both, whether you're renting from, a mom and pop landlord or you're renting from a, institution.
Right.
I would tell you that the institution is probably more likely to have a more sophisticated type of platform where you're going to request your maintenance requests. There's probably somebody there from 9 to 5 every day to answer the calls and, do all of that. And so that's the reality of that. And some people are really comfortable with that, the houses are always safe and habitable. They very much check on all of that. They have too much to lose to put somebody in an adverse situation. Whereas the mom and pop, right? Like that's a different game. And, the mom and pop guys, I think like a lot of them are self-managing. Those that are using property managers, are using a disconnected group of them and they're all doing it differently. So you're going to get a different flavor, when you rent from the mom and pop versus the institution. Neither one of them are wrong.
Right.
They're just different,
Right.
So I don't think that any one of them are bad. And I think it's just important. Like if you're looking at where you're going to live as a tenant, just pick where you're going to live. Like don't let the landlord be the decision maker, right? I don't know. Like there's so many laws in place now. It's pretty simple. Just pay your rent. The landlord has to maintain the property. Like that's the reality of the whole thing. Let's not get it too complicated.
Well, you got to remember, like only 3% are owned by corporate. So chances are you're not going to live in one.
Right.
Right. Your landlord is going to be everyday people.
Yeah.
So to your point, corporations may have a sophisticated flat platform to help you out, but the mom and pop is going to be a little bit more relatable to your everyday situation. They're a part of the community more likely too, as well. So, yeah, good point. Good
They're
point.
probably your neighbor.
They probably are your neighbor.
Yeah.
In fact, I actually rent.
Yeah.
And I found out the landlord, he sees me every day, and I've never known that.
You never knew it.
Yeah, until he came over, and he was like, buddy, I see your kids playing outside all the time. And I just love that.
Right.
I was like, so you're a part of this community, so it's important to you as well. So it's cool to be relatable from that standpoint.
That happens a lot where like people live in their neighborhood and then a property will pop up and they'll be like, man, I know everything about this. I can see it. I could touch it. I'm going to buy that one because it's right in my neighborhood. I mean, that happens a lot. I think probably more than you think. Landlords are doing that.
Yeah. So, if you were to tell folks to take away, right? Let's just remind investors and then agents and then folks that are renting. What are some of the key things you want investors to just take away from just this segment?
Yeah, I think, that there's opportunity, right? That there's not that the mom and pop investor has dominated the marketplace for the last 30 years, right? Absolutely. 50 years, and will continue to do so. It's, the institutions come in with these strategies and they're short-lived, right? They raise a certain amount of money, they go deploy that certain amount of money, and then that money performs in the form of rental properties. They're not the bad guys, right? They're not doing anything different than you guys are doing. But I think as a landlord, like look for the opportunities in like maybe areas that they're not buying. Look at opportunities on properties that have a little bit more hair on them or need a little bit more renovation that they won't touch. And then start thinking about like, well, if they can operate at a lower cap rate or a lower return, why can't I, clean up a bunch of properties, fix them up, get them stabilized, and then sell to some of these bigger groups in bulk. I can sell them 5, 10, 15, 20 properties at a time. And they love that. They love to ingest that kind of inventory rather than buy them one by one. So, I think at the end of the day, the institution has brought forth like opportunity and they've done a lot to organize a pretty fragmented industry. For only having less than 4% market share, they've done a lot for a lot of good for the industry too. So I don't know. To me, I think it's a good thing. I don't think it's a bad thing. I don't think they're swiping home ownership from people. I mean, we can get into that maybe in our next discussion of like, what's the problem, in the US, but there's not more corporate or more rental houses because these guys are buying more. There's more rental houses as a result of less people being interested in buying retail homes.
Yeah.
That's the challenge.
I will add, there is plenty of room for the mom and pop investor.
Yeah.
But one thing I will say is, the one thing I do like about corporate is they use data to make these decisions.
Oh, yeah.
They are 100% data focused.
Yep.
A lot of times they have no emotions about these homes. And so if there was a takeaway that I would tell investors is, you probably want to do the same.
Yeah.
Is use some form of data, not just about the house, but the affordability, the demographics, as you mentioned before, education. Everything plays a factor of what people can do from a rental perspective. So, all right, let's close with real estate agents. What do they got to remember?
Oh man, agents. I think they've got to remember to focus on those off the market opportunities that come about, right, and just keep their ear to the ground on those buzzwords that they hear out there. And then whether it's like using a company like ours to source those opportunities too, or getting your own bullpen of investors out there that you can like send those deals to, just do that, right? Because like if you're planning on doing 20 transactions this year, what if you could add another 5, right? What if you get another 10 that were off market? Because these investors move fast, right? And they'll buy more, and like you'll see that customer more frequently. I don't know. I think there's just a lot of opportunity for agents to grow here, especially being that there probably is going to be less transactions, across the board. So,
Love that. And if you're a renter, again, most of the homes are not owned by massive corporations. They're everyday people. And more than likely, they live really, really close to you. So you may have some sway over what should get fixed quickly. I don't know, but close with just the renters really quick.
Yeah. I think that if you're a tenant or renter, I wouldn't be afraid of like who the landlord is. I think it's like it boils down to like go out to look at these properties, find it in the neighborhood that you want to be in, and then try to create a long-term relationship with your landlord, regardless of who it is. It could be corporate, it could be mom and pop, it could be whoever, but being a good tenant and being like, pay your rent on time, fix the little stuff yourself, maintain the property so that we're not having any issues there. You're going to find that the landlord is going to be your friend. Like you guys are in business together. Just treat it like a home. And I think you're going to find that it's just a better relationship across the board. They're not out to get you, I guess is what I'm saying.
Love that.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.